Okay, the recording should have started by now. And again, my name's Cade Boone. Um, and when you launch DBC Finance, it will open up to the last database you've been working on. I cleared out the cache and everything like that, so it's just opening up onto my OneDrive. But if you've used finance before, you will note that when you launch the program, it will open up to the database you've been working on. If it's a first time, trying to mimic somewhat the first time, you will just see this open data file. Now you can go search and go look if you have an existing, here's some existings, or you can create a brand new one. So for example, I can do 2025 Q4 training, open. Now it will open up. I wouldn't let where it says issuers confuse you. Anything that says a .df2, that's a database, that's a data file. And within each database, so you can create as many different ones as you like, but within each database is where you're going to create your series, your refunding, if multi-purpose deals, project finance. So everything is going to be created underneath this database, right? So, and there's ways to merge separate databases if you do that and need to. But, and there's different ways to view it as well. There's detail. A lot of times that's kind of the standard. So from here, we can then begin to create different issuers, ABC County, for example, issuer, DEF County, or, some kind of a public school system or whatever it happens to be. Within a database, you create first your issuer. So if I did ABC County, now I can create a different issuer if I want to. The big thing is within each issuer. So if you create a refunding, right, you won't be able to select bonds. If you create it under ABC County issuer, you won't be able to create or locate or see, let's say, refunded series if those are created in a different issuer, like DEF County, for example. Now, there's easy ways to copy from one issuer to another, but just letting you know, if you're starting off and let's say this is a refunding, um, just know that you need to put them all under the same issuer if you want to refund those bonds. Okay. So ABC County, and we click new. Now, this is like any other Windows-based product where you can select, you can hit the F5 key, will bring up a menu. You can select and right mouse click, bring up a menu, or toggle over um, and select even, or with the mouse, you can click new. This is where we're going to begin under the ABC County issuer in the 2025 Q4 training database. This is where we're going to start creating our different series today. Right? So let's start off with a new money series, for example. Right? So I'll say, let's say 2025 new money. New money series. Proposed. And I'm going to show you more clearly, but all of our settings, the default settings, will happen to be either whatever's most commonly created or industry regs, calculation methodology, and so forth. So, for example, it really wouldn't make sense if, the status was a proposed pool loan. Now, if these are actual series, we're going to refund them. Existing series, we would make that switch to actual. I would say probably 100% of the time, or 99%, you're either going to select actual or proposed. And we'll get in more into that in detail in a little bit. So click OK, automatically goes into the series. You can always click open and we can see now we've created. Right? I would say get used to, if you are creating, you start creating a bunch of information, to either, control S, and you see it, depending on how quick your computer is, sometimes you won't even see anything pop up like that. But at the bottom, it will tell you Series ABC 2025 NM saved to this database. I would say only get used to automatically saving, because depending on your setup, most cases, you could create a bunch of information and all of a sudden, what if your computer locks up, you know? Um, but we can get in that in a little bit. So you'll see the general area. Before we get into that, wanted to show you a few things. The first thing you're going to want to do, if you haven't, when you open up, go into finance, go to tools, preferences, you're going to put your company name. If not, when you print out the reports, it'll say prepared by DBC, right? So you're going to want to replace it with your company name. And then you're going to go over to internet settings, and you're going to put your company name, email address, phone number, and so forth. That way, whenever you have an issue, and believe me, we've don't think an issue has never come up or it's super easy or what. That's why we're here. What you're going to do is, when you're in your particular series or refund or project finance, if you have an issue, even if it's super simple, always send your data. Even if it's like doesn't pertain to it. If you just say, well, this doesn't pertain to this, but I want to know this, or you just go to help, email data, and I'm just going to go ignore. But you're going to type out what the issue is. Why am I not getting level debt service in every year? Or why can't I wrap? Or whatever it happens to be. And then you're going to click OK. And hopefully your computer's a lot quicker than this one. But it will show you debt size data file has been successfully sent to DBC. So what happens is that gets sent to not only myself, the product, everyone in support, but we kind of have these, not only the front line, but we also have people that see it that aren't on the front line, that maybe be backup or and so forth. So one of us will reply to everyone in the group and say, I got it. The first person that says, I got it, then gets it. And most times, well, given your, information you've entered in, we'll be able to answer it, reply back. A lot of times, screen shots, and then we go from there. And then it's going to be that easy. So, and that's really the quickest turnaround time as well. Now, getting to the actual program, you'll notice, again, we try to set this up as logical as possible, meaning start with the general bond information, because if you skip that and you start creating the bonds, then you have to create the data delivery, first interest payment date, and so forth. Whereas if you create it from the top, it auto populates each different type of bond that you create: project funds, reserve, cap I, expenses, bond. Finally, how do you solve it? And we'll go through all that. Okay. I'm just scrolling using my up and down arrow. As you can see how it's highlighting. Obviously, you can use your mouse as well. You go into it. General bond information. Let's just say it's 12/1, it's a few days ago, right? And then we're going to go 6/1/26. You'll notice something, different font color. This really, I think, becomes important, especially in the bond components themselves, only because blue font color means information that's been hard coded by you or a colleague. It's not by the program. Um, and this is good, especially and during trainings, I sometimes will bring up what we see a lot. We'll get a file sent to us and they'll say, how come I'm not getting level debt service first year? I'm not issuing any par, for example, any principal. What's going on? I'll immediately go into the bond component and I will see a 0 in blue font color. And that means that was hard coded. And that means I don't care if it's optimal or not. I do not want to issue any principal or there's some kind of an amount entered in. And so I'll reply, hey, unprotect or delete this, calculate. And now it'll allow the program to issue par in that first maturity and get level debt service starting that, maturity. So just know that if you hard code, you want to know information you've inputted versus information that the program has spit out, so to speak. Okay. So in another, default, typically semi-annual, 3360 day basis. And most common, doesn't mean that's your only options. If you ever have an issue, and our support is 9 to 6 Eastern, Monday through Friday. We try to look at files that fall outside of those support hours. It's not guaranteed, but a lot of times, if you hit the F1 key in any particular area, it will open up help to that specific tab. So if you wanted to know if it's 360 on an actual, is it divided by 365? It'll say, or 366 day year, depending on if it's a leap year. Another is we have an FAQ. These are frequently asked questions, and some are very easy in nature, and some are very complex. So it's not, oh, the FAQ is just very difficult. No, some are very simple. Some can be fairly complex. So I would advise, if you ever want to, kind of go down, how are certain things calculated, for example. And so sometimes we will show you the screenshots if it is in an FAQ, and we will copy and paste as well. But this is actual from clients over the years. These weren't FAQs that we just made up and wanted to put it in here. I would say at this point, I don't think we've created an FAQ in a long time. I think it's pretty much covered it. And finally, there's a glossary. So, for example, we'll get, hey, I set up a reserve fund, a lesser of test. I'm calculating average annual debt service this amount. DBC is not. How are they Well, you go in here and we'll give you how it's calculated in the program. All right. So glossary can also help. So that's kind of the help section. But what's really good is in a lot of cases, if you don't know something quite in a tab, hit the F1 key and it will provide more detailed help on that. Another, cost of issuance, underwriter's discount. I typically would maybe steer away from creating your issuance expenses in these tabs unless it falls. And here, I'll tell you why. One, it's, if you typed in, so for 250,000, click it. Well, first off, you don't know if you've, or somebody, if you're working on a file with someone, you don't know in the general area. You don't see anything. You have to go in here. That's one issue. The other issue is, what if it doesn't fall under, dollar per thousand dollar par amount or percentage of par or some kind of par coded amount in thousands? What if it's based off of a formula that doesn't meet one of these? Well, it's limited that way. And finally, if this is part of a multi-purpose deal, what we call project finance. So oh, I'm creating this new money. I've got to then create a refunding. And then ultimately, I need to import both. And I want to wrap, let's say, my new money around the refunding, and I want refunding to give me some kind of let's say, level savings with a objective of overall aggregate debt service. Well, most of the time, your issuance expense are going to be calculated in aggregate and then allocated across, or maybe only to one series or whatnot. Basically, you create it in here. It's not an icon. You can't just cut and paste it into another module. So it is limited in scope. If this is very basic, vanilla, and you want to do that and it fits under one of these three, more than welcome to do that. Okay. But I'm just letting you know. Finally, the notes, if I said 2025, I mean, it's pretty obvious given that I named the database 2025 Q4 training, but perhaps let's say I didn't. And later on, I'm going through my data files and I'm going, what is this? Let's say I didn't name it that. I could go in here and I could click and go, oh, that's when I trained in Q4 of 2025. Oh, okay. But I would say most likely it's going to be any kind of notes that you want to jot down, you want to have that pertain to this particular deal. And again, save. So if we go down and now start creating bonds. So if I say, let's say serial, let's say I'll go out 30 years, right? Let's just say it's to 55. And as you can imagine, when you create, so if I click OK, now you can start seeing icons, right? And dated delivery, first interest payment automatically populates. Now you don't have to, if you skip debt size assumption setup, you would have to hard code this information in. So as you can imagine, what's the most common created bond? Serial bonds. So you pretty much don't have to do anything here. Wouldn't make, again, these are default settings, what's most commonly created. If this was a convertible, not a convertible, a cab serial, you'd make that change. If it was a convertible cab, you'd put, okay, here's the final compounding date, then it calculates simple interest, semi-annual, you'd make that change. Or some kind of a note, typically matures less than, 18, 12 months. But again, what's most commonly created, serial bonds, you don't have to do anything even down here. This says price to actual maturity. So just because you name something term, cab, that doesn't mean the program knows, oh, it needs to calculate it as such. Okay. It's just a name. It's just a word. Naming, serial. If I can name this term bond by accident, it wouldn't automatically know to make that switch. And I'll show you the difference here. Price to actual maturity. This means every maturity date we enter, it's going to price It's going to be as this, that's its own serial bond. We go to maturity structure. Automatically an enter dates box appears. If you get out and then you go back and it doesn't appear, again, right mouse click or F5, go to enter dates. And then we could say 12/1/26, say, and then 12/1/2055. Annual. If it's semi-annual, you'd make that change. This just means every December 1st. But you could say annually on the first business day, let's say, and you make that change. See how some of these are on the 3rd, on the 2nd. Then you go, no, I don't want that. I want to go back. You could just do copy down plus 12. That should, let's see if it goes on. Yep. This will also allow you, if you already have the rates, yields, price, let's say in Excel, you can copy and paste if you want to do that. We also have a way to populate through MMD, especially if you have an MMD account. A lot of our clients, some of them do, a lot of them don't. That's through a different source, but I'm just going to kind of go and show you. If you have some kind of a pattern, you can Control C, Control V all the way down. If there's, just to kind of show you how to use this. If I say, plus 0.025, let's say, something like that. The big thing here, again, remember blue versus black font color. If you go in here, I would say hard code 2 out of the 3 columns. Because you could go in here and go, let's say 1.0251, right? If you hard code that and you calculate, it will give you a warning message saying, look, you hard coded rate, yield, and price for a maturity. Make sure and verify the reports that they're accurate. They may not be. So we always recommend going to the, one of the 3 columns. You can right mouse click, go unprotect, select it F5, unprotect, or hit the delete key, and that will snap it back to the correct price. Same thing with there. Takedown, you may have a, per maturity, if you said, I have a $5 takedown. And by default, they're issued in 5,000 denoms. If there's no denoms, you type in 0. But again, it's in thousands, pretty much everywhere in the program except itemized expenses. If you have a specific cap I draw amount, those will be entered into the penny. Expenses, itemized expenses. Pretty much everywhere else, an amount you hard code, it's going to be in thousands, or it's going to be shown in thousands. That's a programming, keep it as calculation as fast as possible. Few things. Anytime you have to scroll from the main area, main section, that's intentional. It's information. Typically, doesn't mean you'll never use it. It's not as common. So if this was a bifurcated maturity, same maturity in different rates, you would distinguish that in the variable column. And again, hit F1, full explanation. But this is intentional. We typically don't advocate call date, call price, even if these are actual, because a lot of times, especially depending on your monitor, depending on how big of the font, that call date, call price might be not shown when you go into it. So what happens is someone creates an actual call table with different dates, and then they're wondering why, how come they're not being called to the call table? Well, this overrides any call table information. Finally, in advance, similar concept. I would say if you do a lot of variable rate deals, this will be about the only time you will need to consistently go into an advanced section. But everywhere else, a lot of it's pricing and valuation, multi-mode table. This is generally used if you have odd interest payment dates. It's not every 6 months. Oh, I'm trying to match. These are very particular. Well, you can hard code that in. Assume if you want to override if they are called to be priced to the call date or not. Again, it's advanced for a reason. A lot of these are just calculation setups, backwards from the payment date. Again, default, which is industry, off of industry regs, what's typical. So don't, I would say in most cases, the advanced, it's in there for a reason. Okay, so we created all that, just the serial. So each one of these serial bonds, right? So I could have created 30 different bond components if I wanted to. You would never want to do that unless you, for some reason, want to, but that's great. So you can create all your serial bonds in most cases under one bond component. Now, obviously, if some are called, some are non-call, you want to split those up and then link a call table to only the callables. But term bonds, if you've got multiple term bonds, you cannot create them under one term bond. So each term bond has to be created in its own bond component. So if I did term, let's say it's 60, term bond due 2060. The only thing different is we will select the term bond price to final maturity. We will go in here and we'll say, let's see, 56. Yep, 12/1. Yep, 60. So what we're telling the program is this is one term bond, sinking fund payment dates start in 56, and it matures in 2060. So if you forget to make this change, it'll still calculate. You'll probably know after you run the numbers. This will treat this as 5 different serial bonds. So again, because this is one term bond, obviously then the rates, yields, price needs to be the same because it's priced to the final maturity. Let's just say it's 2.5. And again, if these were discount or if these were, premiums, you would make that change. You would hard code. Typically, you're going to hard code the rate and either the yield or the price. If you're, say, trying to match numbers, for example, or their premium or their discount. And again, let's say these were 5. Now, we'll get to the average takedown here in a minute. So again, I'm going to click save just in case. And then we'll do one more term bond. Term, let's say 65. Term bond. Short names limited to 8 characters. You can do underscore, but it won't handle things like, a dash or a multiplication or a plus sign. It's pretty much numbers, letters, underscore. In the short name, a lot of time is a way to link or to reference, if you want to calculate. In some cases, if you want to calculate an expense off of particular maturities, well, those particular maturities need to be in a certain bond component, and then you can say 0.5% of total debt service of term 65, and it'll know to calculate from that. So click create again, select term bond. and then do 50, what is it, 61? Yeah. And again, I'll just put, let's say it's 2 and 3/4. Again, this is information you're going to know. Let's see. Now, and again, I'll get to takedown in a moment. Um, if you have cabs, convertible cabs, um, and again, you create those one at a time. Help tutorials, debt size refund. If you forget, also when I get it edited, everything like that, you can go over it visually. But we go over, say, in the debt size tutorial, cabs. Um, and basically, it's just that one switch, and then you put um, the compounding yield under the rate column. But besides that, going down project funds. This is where we can create multiple project funds or just one. And there's different ways to, depending on the information. You may say, oh, I've got, a $250 million project fund, that needs to be invested. You may or may not have draws, but if that's that's where you would type that in. Default is calculated, or you may know, look, I've got a $250 million, series, par amount. I want to fund excess proceeds into the project fund. You make that change. So there's many different ways on calculating project fund. So in this case, it's 1/1/2026. Let's say, 1/1/2000. Yeah. And let's say it's through, and then monthly. You would hard code in if you did have draw amounts. You would hard code those in again in thousands, or you may go, I know what the draw amounts are. I just don't know what um, I think you can do. No, it's only on the excess proceeds. It's the opposite. Yes. So if you went, oh, excess proceeds, or it's, 250 million, but I don't know what the draw amount requirements are. But I know the dates. You would select that draw weights. These are even. You may want it to be half early on, 0.5. So as you can see, there's many different ways, depending on the information, on calculating, creating project funds in the program. I would generally leave, again, default net fund, earnings stays within the fund. But we'll see in a moment when we create a reserve fund, debt service reserve fund, it's going to be gross funded, right? Because the interest earnings calculates and typically pays out or draws down debt service. Right? And again, F1 gets into more explanation on the calculation methodology and what's included and what's not. But generally, it's either going to be CAPIs are typically net funded, debt service reserve funds are gross funded. A lot of times, project funds. Now, it may not matter if you don't know what the draws, you don't have any draws. It's just that delivery. Here's the project fund. Then it doesn't really matter. But I would, again, you hard code in a first interest payment date, and it ends up being different than, let's say, 1/1, not 1/1, it was 6/1, right? 6/1/26. Then you're going to go, oh, how come the interest payment on this particular fund doesn't match up with my bonds? Well, You hard code in anything here, it's not going to deviate from that. If you leave it blank, it will adjust. If you do adjust, let's say first interest payment date, or based on the draws, it's gonna generate from. So it really depends on the type of fund, how the funding option. I would just say if you don't hard code in, I wouldn't hard code in any of these dates in terms of like first interest, unless when you run the numbers, you go, oh, why? I need the first interest payment date to be this, then I would enter it in. So that's just kind of a common, just one way to set up a project fund. And then we go here. Now you'll notice every time we go in here, this component gallery, we'll get to that when I create expense. But this will allow you, if you double click, like reasonably required reserve fund, blank fund. I would say if you're just starting off, I would recommend not using that, only because the more, especially if you're not just going to do vanilla type deals. If you're just going to do vanilla type deals, then probably doesn't matter. But um, I think the biggest challenge is hard coding, especially formulas. And when you have options for the program to do that for you, eventually you're going to not see that option. And then you're going to feel like, okay, I don't even know. I've never really entered a formula. I've just always selected from the drop down menu. Um, you're then kind of starting on square one. So I would just type it all out, and we'll get back to this. But I would say again, I see this sometimes, someone types in, you know, let's say originally the bonds went out to 2070, or they messed up. And then later on, they got rid of it and the final maturity is 65. Well, you're going to run and you're going to go, okay, my final maturity is in 2065. Why is my reserve fund releasing the deposit in 2070? Again, you hard code that. You're telling the program, I don't care if it makes sense. I don't care if it's valid or not. This is when I want to release it. It's program's never going to assume you hard code something in that you're wrong. Which for obvious reasons you don't want it to, right? Because in some cases, for whatever reason, you may want it to. I have no idea why, but um, keep that delete. A lot of times, this is what I see happen, and we'll come back to this to show you how to correct it. But you'll see here, um, you know, if you press some kind of um, like a space bar, you'll see options. The thing is, it's not limited to what's just being shown. There's no way we could show everything possible formula. That's just what's most commonly you are created. I would, and again in F1, I would even type in NLF, which stands for Natural Language Format. And we have a bunch of examples. I think this will probably, as you notice, F1 shows you what a simple or a typical, how to set it up. So you have questions, hit F1, we give you examples. But there's lots of different options on how to set up. Look, this is just one section. This will probably, and that's why you have support. You say, oh, I'm trying to, calculate, I'm trying to shift a particular expense on one day to another day. It's a lot. So I would say the joke's always been natural language format. It's not very natural when you first start doing it, but once you get used to it, it's fairly easy. So I could say lesser of 10% of par, 25% of, but if you did do some kind of a drop down, right? Maximum, um, oops, So this just means when we calculate it, it's going to take whatever the smallest amount is from line 2, 3, or 4. That's what gets deposited. And then we're going to generate interest, and that's going to draw down debt. Okay. Pretty typical. And we even tell you here, balance requirement, typically debt service reserve fund, you're going to enter information here. If it's a cap I, you're going to enter information in the draw section, which is now cap I. Oop. By default, it's net funded. Typically, a cap I, your earnings are going to be applied towards the draws. So that's what's usually selected. That's different. Right? And if we go in here, we can see bond interest accrued through, let's see, could go about 11/1/2026. Now, if you accidentally, enter something incorrectly, it won't allow you to hit enter. You'll see at the bottom, general data error. And then you go in and correct that. And again, if you forget, you're new, don't know how to do it, you just send us your file and say, oh, I'm trying to cap I interest, through whatever date. What's the formula? But again, F1, you'll notice accrued through versus through. I would always advocate putting accrued only because if you do bond interest through a particular date and it's not on an interest payment date, then it will capitalize, I think, to that next interest payment date versus accrued just means I don't care if the through date falls on an interest payment date or not. And we even give you, if you have, instead of a formula, you just say, look, on this date, I need to draw out this amount. Well, you would type in the date, space, followed by the amount to the penny. Right? So again, anywhere you're not quite sure, I would say number one, press F1 key. And a lot of times that will help. If not, no big deal. Send us your file. Either way, that's why we're here. So, and we'll get back to all this. Now, expenses, I would say underwriter's discount, cost of issuance, itemized expenses that don't, that aren't part of issuance expense, you can create it all here. The default is a general expense. I'm going to show you this and then create. This is a lot of times if it doesn't, now it can, but you can select if it's underwriters or cost of issuance, or it can just be other. You can dictate whether or not it's included or not, in particular, RTIC, and you could say, 0.5% of bond, value paid, or whatever it happens to be, some kind of amount you could hard code. Again, F1, then you can search NLF. These are itemized expenses. A lot of times, and I'm going to go back and I'm going to cut that. Let's say we have an issuance expense. So you could say, instead of default, it's the issuance expenses. So this is kind of like that debt size assumption setup to separate, right, the cost of issuance and the underwriter's discount, right? The difference is now you see it. I mean, me personally, and also gives you a lot more flexibility. Now you may go, well, dollar per $1,000 par amount, how do I do that? And I'll show you. But you could go in here, you could say cost of issuance, 250,000, right? Underwriter's discount. You could say 5 per bond, 1 point, or you can say 2 per bond. It could be some kind of amount. You could say 1,500. You could say let's say 0.5 per bond. You have general expenses 5,000, let's say, or you could say 0.1% of par. Now, if you have average takedown globally, 5 per bond. Remember, we entered it in each bond component, and you go, oh, I didn't mean to do it, because it's going to cause an issue. It's going to calculate per bond and globally. So you're almost kind of double counting. You don't want to do that. Well, you could go in and highlight and delete, but what if you've got 10 different bond components, right? Let me show you a way to update. And I'm showing you this. So, if you input and then you realize now I got to go back and delete, it's probably no big deal if you got 3 bond components, but you may have a lot more. Where can I go? Well, you can go to additional info menu, modify bonds, or you can do Control B as in bonds. Right? And there are, you can say, you can buy rate, yield, price, highlight the whole thing, right? Hit the delete key. That's great. Execute. Save. Now you go in here, you notice it's all gone, right? The other, by maturity structure, you go in here. This gives you a lot more detail. Maybe you did put call dates, call prices, and you go, oh my gosh, I put call dates and call prices in each one of these, and I got to go into each bond component and manually delete it. No, you can go in here, you can highlight, hit the delete key, you can delete certain ones. As long as you delete it and hit execute, then that's great. Finally, if you have M&D yields that you want to either, you have a coupon file, a downloaded file. Most clients don't, but if you do, this is where you would do it. But again, you'd have to put in your login information and tools, preferences, internet settings, or you may have it, Excel, and you're like, I've created all the bonds, all the maturity dates. Where can I update? Or, now I've got to go into each. No, you can go in here. You can put in the yield curve. You can put in a spread, credit spread, additional spread, right? So that's the modified bonds, kind of hidden, but remember a Control B as in bonds will get you there. Now, a lot of times clients will say, look, I've got, not only issuance expense, but I created a bunch of other expenses, all these icons. And I pretty much kind of, marketing fee, bond counsel. Do I have to start from scratch every time I create a new series? Do I need to do that? No. Anytime you see an icon, you can right mouse click, let's say copy, go to tools, call it component gallery. Now this was already created. I'm going to create let's see, I'm going to create a blank one here. And this might be good if at your firm, if you're not, let's say you're not the only one using this. And there's good and bad, right? If this is shared, you and your colleagues can come in here, paste that. You go, okay, great. Now, it doesn't have to be this data. It can be in a different data file. It can be in a different issuer. You come in here and hit detail, you'll now see it. You double click on it, whatever the short and long name. Now, obviously, the amounts or the formulas may need to change, right? But this is kind of creates a blueprint. The good and bad thing about sharing, right, is if somebody goes in to component gallery and decides to delete, right, or delete what you created and put their own. Um, but again, this seems more than anything, the component gallery um, seems to really be best with clients that create, I see, expenses over and over and over. And they just kind of want to cut through that. So they save it all once and they'll see all in the component gallery and they can just select it one at a time. Right. So let's save that. Additional info menu. We're going to get into other debt service reporting options. I would say if you ever additional titles, most times if you want to solve off a certain date, but you want to align it to a different, you would make the alignment date in here. The reason I wanted to show you is footnotes. So I could say all reports. This is, 2025. Let's see. You can do certain reports only. They can have different footnotes. Alternate text. If you ever look at the reports and whatever DBC, gives you some kind of a text on something and you want to change it, then you can select either all across or a specific report. Make sure the original text is entered exactly how it should. So if it's a title, let's say sources and uses of funds, and it's all caps on the report, and you don't type it in all caps, it's not going to replace it with whatever you put. Okay, that's kind of the biggest thing. Original text, enter it in exactly, how it's shown in the report, and then replace it with however you want. And then there's a few others, but show you how to get to that in a moment. Finally, at the end, I'm going to click save. How do we want to solve the series? Default setting, level debt service. And we're going to get into a few of the different options here. But I would say besides level and equal, which is I just want level principal, then you don't, anything other than those two, proportional, uniform, which is level savings, front loaded or back loaded debt service, or fill, maximize, well, anything other than level or equal, that's where you have to come in here and you're actually going to have to hard code or link it from another formula. How are you going to solve it? What are the revenues? Filling to what, right? And again, F1 gives you more detailed explanation. Proportional to what? Level savings to what, right? Front load debt service off of what, So again, default level. If we do have some kind of a fiscal period, we aren't solving off the bond year off of 12/1. Let's say it's a 6/30 or what, you can hard code that in here, as well as the very beginning, debt size assumption setup. You could enter it in there, either place. So we kind of got you both ways at the very beginning or the very end. Solution, we'll get to this. This is if you want to, by default, if feasible, it's going to try to solve level gross saving, just level debt service, right? Well, we all know we've created a reserve fund. We've created a cap I. So if we run this and then we view the net debt service report, it's not going to be level, right? Your bond debt service report will be level if feasible, So We'll get that a lot. Oh, how come it's not level in the net? Well, you have to go in here and you have to adjust the debt service off of any earnings or draws. In this case, reserve fund cap I. And then we'll get into wrapping existing debt service. We'll get into this. Bond component targets, we do have an example in the tutorial. Don't see a lot, but you may go, oh, I need, I don't care. Optimally, it's giving me X amount of par for that particular component. I need it to be a exact, here's the amount I need it, or I need it to be 33%. Again, don't see this every once in a while. But this is covered in one of the kind of more advanced sections in that tutorial. Overlap, if you want to force them, in this case, they aren't overlap. And project finance kind of more of an old school way of within a financing to wrap. You don't really need to do that anymore. So level net debt service. Let's see what happens here. Okay, use an expression average annual debt service. You probably use average annual adjusted debt service. Now, in this case, adjusted means take out accrued interest, but date and delivery are the same date. But as you can see, warning messages doesn't mean it's impossible, right? It's just a warning. I would read them. I wouldn't ignore them. But if something's done that's impossible, it will give you an error message and tell you why you can't continue to calculate. This is just saying that. So that's fine. Print. Let's do some reports. Bond pricing. Average underwriters. Yeah, we can do that. I'm going to put reserve fund, project fund, net debt service, formula verification. Now you'll notice I double clicked. You can select it once and then hit the arrow key. It's up to you. Like almost anything, you have different options. Just know anytime you see a report and there's parentheses, that means you can modify it. So you can select and hit modify. Let's say I want to do an annual, but I also want to break it out per bond component, detail, bond solution, reserve fund. Let's say I want to move that up. I shouldn't move that up. Project fund, I want to move that up. Net debt service, more times than not, you're going to modify that to annual. I will only say, obviously, when you're verifying, I would keep it on continuous because a lot of times you can have questions like, okay, well, why is it not level on that? If you annualize, then it's not going to have it broken out to exactly when it's being paid out. And that can be, reserve fund, cap I, and so forth. And finally, I'll have the formula verification. Now, if you always, and one other thing, preferences, I would say let me just get out of this. Sorry. Anytime in a report, you go, for example, how come I want to break out my cost of issuance? How come it's just a line item? Right. I want a different color font. I want to not show it broken out in the sources and uses. Aggregate term bonds, that means a lot of times that can be activated. You could say, I don't want to see the sinking fund payment dates in the bond pricing report. How do I do that? Print, preferences, bond pricing, you would aggregate. That means just show the maturity, don't show the sinking fund payment dates. And again, F1 explains more. Basically, I would say anytime you look at a report and you want something taken off or shown in more detail, or why isn't it, I would say number one, go to print preferences and go to the relative tab. And a lot of times, you know, um, I want to print a certain annual debt service column, or I don't want to print, or why is it not printing the coupon? Somebody came in here and unchecked it. You know, basically any questions on a particular report, I would go to print preferences, and go to that related or that relative tab and see if that doesn't answer your question. Finally, you may have in print available reports. So for example, debt service, cap I, and you have bond maturity statistics, and you can go through the different modules and make that change. Now when I go, I may go, I'm going to get rid of the reserve. It will kind of under one report print off all the, I mean, it'll be different pages, but what if you go, I don't want to print out the cap I report for whatever reason, right? Well, if you select reserve, sorry, they're both being included, right? This option gives you the different, they're item, they're broken up. So let me do that. I'll put anytime you go up and down, right? And then now probably wanted to do that more. Project fund. Yeah. Bond solution, net debt service. Okay. So if you have a certain order, so we kind of went through a bunch of different changes and back here. And then you go, okay, do I have to do this every time? No. Kind of like component gallery, we had this where we can save these packets, right? Packet, I'll open that up. And I can say, whatever, 25 Q, what are for debt size? I'll just say, you know, so whenever, and again, you can be in a different issuer, different series, so forth. Now, depending on, um, if these are refund specific reports, you won't be able to pull them up in a debt size because there's not escrow and stuff like that. But when you go in here, load, right? So if I go here and I hit delete and then I go load, select it, it's in that exact order. So now when you view it, all right, you'll see it, there's a table of contents. Right? A lot of you have probably seen this source, in uses looks like this. We get, and again, you may go, I don't like that it says project fund deposits. I want it to say construction fund. You can replace project with construction, or whatnot, alternate text. I don't like it in all caps. Well, type it in all caps, original, and then not in the replacement. Snapshot showing you on sources. Statistics overall showing you, statistics from the average coupon, TIC, all in TIC R build. And then it's also broken out, average coupon, average life per bond component. Now, it used to be you had to kind of create each serial bond in its own bond component if you wanted the average coupon per maturity, average life per maturity, and so forth. This also shows you what's included and what's not. You can go back and make that change. If it's itemized expenses that you meant to not include or include in a yield, you can activate or deactivate. But the last report, I would say, and it's been out a while, is the bond maturity statistics report, and I'll show you that. But here's the bond pricing. These aren't, we didn't at this point set up a call or anything like that, which is fine, but it's just showing you. And there's ways to put it all on one page if it's, the thing is, this is a smaller monitor, so I'm trying to make it larger. That's why it's fitting on. But the bond maturity statistics is kind of our newest report, but it's been out a couple of years. Where if you do, and again, print preferences, statistics tab is where you can activate even more information or you can deactivate. So if you're running it and go, how come I'm not seeing average life, right? On my bond maturity statistics, when I was doing the training, I saw it. Again, print, preferences, statistics tab, you'll scroll down, you'll see average life is not selected. Just select it, then it will appear. And this will show you per maturity. I think it's been a pretty useful report, seems like. If you really want to break it down, especially when we start trying to call, and we'll get a lot of that. How come some of these bonds are priced? Bonds are priced to the lesser of call or maturity, right? So it will show you the yield to maturity versus call, and the lesser of will be whatever the yield shows or the price shows up as well. So that helps. Let's see, but bond maturity. See, that's because I had a bunch of. That's fine. Bond maturity. Yeah. Okay. Underwriter's discount. Remember, it was just a 5. We deleted per maturity. We got that amount. Cost of issuance, 250,000. Bond debt service, 1 report. Remember, we changed that to adjust to make it level net debt service. That's why viewing the bond debt service is not going to be level, which is fine. And I'm going to show you though. So here's detailed. So I selected it twice. And again, I think in the tutorial does the same thing. Select the bond debt service report twice, and one is modified to detail. Detail meaning per bond component. Maybe you want to see the debt service. How does it look on a per bond component basis? Well, can do that. The serial bonds, the first term, here's its. You can see that in 2065, debt service reserve fund. So from the start, it's trying to draw down debt service, and the balance requirement stays the same. Now, a lot of times you're going to probably modify it to annual, but again, for verification purposes, I like to keep it on the default. That way it eliminates any potential confusion. Finally, then it gets released. And then cap buy. So deposit the interest and principal for the draws, which is on interest accrued through 11/1. Even though it's reporting 12/1, you'll notice the last draw is not as much because prior it's 6 months, last it's 5 months. Okay. Project fund interest. Now, this might be monthly interest, so you'd go back and select monthly instead of semi-annual. And the interest, because we kept it blank, in this case, because of the draws, we kept it semi-annual, 3360. We didn't put a first interest payment date. It's looking at, okay, what's the final date in 6 months back? So again, any kind of changes, whether it's monthly or it's semi-annual, but it starts on a different date or whatnot, you would hard code that in. Net debt service. Actually, I'm a little surprised. Hold on. What's going on here? Shouldn't be doing that. I thought my net debt service, I was trying to show a common, there we go. Okay. That's another thing. If you do it annual, that annual debt service, that looked great, right? But this isn't actually really set up correctly. And I did it intentionally because we get this a lot. This is what we get. What is this general fund and why was it created? That's an FAQ. Um, as you can see here, remember, capitalize. We're capitalizing 100% of interest, right? Through 11/1/26, right? Well, for example, 2026 debt service, it's capped by, well, we're also telling the reserve fund to send its interest to draw down debt service. Well, how can it draw down debt service when CapI took care of it, right? Oop, oop, sorry. So what this is doing, the program is doing, is saying, well, we're forced to create a general fund and put that interest in that fund from the reserve fund until it can be drawn out. Now, because the CapI doesn't CapI until 12/1/26, then it's able to. But as you can see, that's why I view it on a continuous, the default. And then the big thing is, well, how do I get rid of it? Well, we need to apply interest earnings from the reserve fund during the CapI somewhere else, right? So how do we do that? We go back to the reserve because this is very common. Do another fund. It could be to the project fund. It can be, in this case, let's just do CapI. Now, in most cases, you probably don't want that general fund. But as you can see, how this was set up, if you viewed it on an annual basis, you really wouldn't know that because annually it's fine. But you probably don't want interest earnings, for those 5 months to be just sitting in a general fund because of this issue. So let's see, we're going to go now to, now we'll see it. Now it's different. Reserve. It's being applied first to the CapI, then it's going to draw down debt service. So you'll see now, you'll see the reserve fund interest earnings. You want that generally applied somewhere, right? During the CapI, either to the CapI or it's to a project fund. And again, this has gone over in the tutorial as well to meet those draws. So now when we view the net debt service, see, there's no general fund when you view it on on a continuous basis. You'll see the annual is level 2.04, within a bond all the way down. Big thing, I would say one of the biggest report is what we call the bond solution report. If you set up everything correctly, whether it's level debt service, level net debt service, you set it all up correctly, then you probably won't need to view the bond solution report. But in most cases, you will. Why is that? Well, if we had not made that switch to solve for level net debt service, how would all you do when you view the net debt service report is it's not level. You're not you're going to see the CapI and the reserve fund in the net debt service report, but it's not showing any adjustment. The bond solution report will show, And in this case, if you didn't do it, you wouldn't see any adjustments. And then you would know, oh, I need to go into, debt size, solution assumption setup, solution adjustments tab. And for the earnings and draws, I need to adjust debt service. Now you'll see it. And this will become a little bit more apparent as well in the next example, like when we do a fill and stuff like that. Coverage factors, you see that in the bond solution report. Or if you ever do project finance and solve in a universal bond solution, that report. Um, so revenues, all that kind of stuff, you're not going to see that in debt side, in a net debt service or a bond debt service report. You'll see what's included and what's not. And in some cases, or you go, well, how come this is not solving like this? Well, if you don't view the bond solution, let's say you're only trying to bond for, in this case, 58 million, but let's say we have existing debt of $1 billion. Well, you can view the debt service, aggregate debt service, and go, why is this not level? Well, if you view the bond solution, you will see another column, existing debt, and you'll go, oh, this is like $1 billion. Like, yeah, I can't, I need to exclude certain early dates from the solution in order to bond on the back end, for example. Basically, the bond solution report is the report, I can't stress it enough, that answers a lot of your questions if it's not working. But again, if everything works out fine, you're not going to probably look at it. But I still would even so, and we'll get to more of that, like in the refunding and stuff like that. Everyone knows the savings report, but you can really modify the savings report any way you want. Doesn't mean it's solved that way. But again, kind of jumping the gun here. But this shows here's the draws and the earnings from the reserve and the cap I, and we are getting it level net in the solution report. Verification. I think this is always a good report, just because you could say, okay, lesser of, I'm calculating it as maximum annual debt service. Well, I would say first case, look at because remember, it's going to deposit the lesser of, it's going to deposit the 2.739. Well, if you just view the reserve fund report, that's not showing you what the amounts were, right? Formula verification, you will see here's 10%, here's 125 of average annual, debt service, maximum annual debt service. That's why. And then that's when you go, oh, well, I calculated average annual debt service 120, it was a different amount. It was higher. Well, F1 glossary, or if you forget that, send us your file, help email data to DBC, and go, I'm calculating this, how is DBC how is DBC? We'll take a look. We'll send it back to you and say, here you go. Everybody good so far? So that's great. That's a standard level debt service, level net debt service. Now you may go, that's good. I'm looking at modify this. You may go, okay, that's good. Level net 2 million, but it needs to be a certain amount, right? It's got to be a certain amount. Let's say it's, I don't know, 2.2 million a year. You have some kind of a debt service objective, right? This case is just, here's all the info. Let's hopefully produce level net debt service. Well, let me show you how to do that. So open, I can select, I can right mouse click, I can go copy. This is so we don't start from scratch. And I can say, oh, fill to 1.1 fill per year. No, yeah, per annual I go in here. So the difference here is we have a certain amount that we want. If we calculate, I don't think it was actually, make sure. Is that what it was? No, 2.1, right? Open, edit, 2.1. All right, again, save. So you may say, look, I have a certain amount of debt service that I need in certain years, all years. Um, how do I do that? Well, you would go into solution assumption setup. Instead of level, we want to go fill. We go to bond solution revenues. I want to enter in the maturity dates. 12/1/26. What is it? 12/1/65. I'm going to show you a few examples here. In this case, it's just 2.1 million, again, in thousands. All right. We'll get to the coverage factor in a minute. But here's where you would enter in. Fill across. I want a certain amount of debt service each year. Calculate. That's fine. Now, a couple of reports I want to highlight is because this happens a lot when you do any kind of fill. Immediately, why is my additional proceeds so high? And it can either be extremely high positive or negative. Well, because your objective and only objective is to maximize proceeds to get 2.1 million in debt a year, right? It's not within a bond. Now that can be accelerated or deferred, where you can say, hey, I want it to accelerate or deferred, not go over, but that's not maximizing. That's not producing 2.1 every year. What do you do with this? Well, you can absorb it. Typically what I see is you put project fund, you go, oh, this thing is always so close to, let's see, close that. So I'll go back in here, excess proceeds. Yeah, it doesn't. It doesn't really matter. We're not even really looking at that, but okay. Now, obviously it's going to fund that. But again, that large amount, because that's going to dictate, fill the par amount is going to be based off of, so debt service adjustments. That's the, that's the CAPI and reserve fund, right? Now you'll notice something different. Here's the revenue constraints you entered in. The unused is the difference. So it should be within a bond, right? And it can't go over. So as you can see, in order to fill to get within a bond, 2.1 million in debt, right? All the way down. That's the necessary par to achieve that. And if that par differs from all the uses, if you have a hard-coded project fund, all that, well, that's the difference. So just letting you know that. So maximize. Now, you can always change it and go, well, I don't want to maximize. If it's short 2.1 upfront or at the end, that's fine. Well, if feasible, you would then just switch it to accelerated or deferred. Now, you could say, that's great. I don't really want it 2.1. I want it to be, let's see, at 110 coverage, right? I'm going to put that back on calculated only because, ooh, no, I'm going to put that back on inner dates. No, I'll put it back on here. No, let's say you had some kind of an amount, right? Let's say it was, you know, 25 million. And then you go, oh my God, I got a 25 million rounding amount. Well, because at 110 coverage, right, we are going to produce 54 million. Well, the project fund plus all the reserve cap, all the that doesn't cover it, right? So again, the big thing is, let me go back and the big thing to know is every time you do a fill or a mixed solution, that part of it is fill. Um, Actually, part of it that should still get you, but okay, sorry, I won't do that again. I promise. Okay, so next bond solution at 110, see, a lot less. So depending on the coverage can also dictate. So you don't want it within a bond, right? You want it at 110% is the coverage. So it's going to be significantly less. Now, um, and again, the net debt service, obviously, that's going, your objective now is not level, right? It's to fill. Right? So, um, another somewhat common um, type of proposed is you have existing debt service, right? You want to wrap existing debt service, um, and you're going to issue this new debt to hopefully then produce some kind of level, some kind of an aggregate solution like level aggregate debt service. How do I do that? Let's go back to the new money. Actually, I'm going to save the fill. Actually, you can go to file exit, or I can just, after I save it, go in here. I'm going to do open again, and I'll go copy. Okay, so what are we going to wrap around? Well, it depends. It depends on the source of the existing debt service. You may have a cash flow, for example. Well, you can't create an actual series if you just have a cash flow. For an actual series, you need the coupons and principal amounts, par amounts, right? So I'm going to show you the two different ways to incorporate existing debt. Um, Again, you may just go, look, I got a set of maturity dates and the par amounts and their coupons. Can I enter that as a cash flow? Well, unless you want to calculate it on your own as cash and then input it, sure. But it's probably best to create it as a series and vice versa. You have just cash flow and you go, can the program back into, I have the par amounts, I have the debt service amounts. There's not a way to answer. There's not a way for the program for you to input the par amounts and input what the debt service should be total. And the program can't back into and figure out what those coupons are. So you can imagine this could be a variable rate deal or not. There's many different variables. So in this case, I'm going to show you both. One, you have coupons and you have the principal amounts. I would say set up a series. So let's say in this case, it's It's a series. We'll go 2010. Or just 2010 um, uh, series. I could put refunded. I'm going to put actual here only because we're going to end up using this in our refund. Actually, you know what? I'm going to keep it on proposed for now. I'll show you. So 2010, it's brand new. So this is all information existing. You know what it is, right? So you can say, let's say it was 2010, and then it was 6/1, 2011. Let's say it goes out to serial bonds through. And again, you may have multiple bond components. Yes, you'll have to calculate all this, but all you have to do is you go in here and let's say it's whatever the rates are, you're going to have that information. Again, if it's just a cash flow amount, you just know you don't know what the rates are, you can't do it this way. That's why I'm going to show you both ways. So let's say it's plus 0.0. It's probably more than that, but I just kind of wanted to show you. So let's just say it's just for time purposes. You type in the issue amounts in thousands, right? Again, this isn't information that you're going to make up in your mind. This is information that's existed already. So you would hard code all that in. I'm going to actually I am going to put I'll wait on that actually. Save. Okay. So you would, and it might be more than one series. It might be, you might have a 2010. I got a 2015. Now we go back to, where's our wrap? Yeah. I'll make sure this is good. Okay, good. Okay. So we're in our series. You've created the existing debt. How do I pull that information in? We go to this debt service calculator, click on it. You're going to open it up and you're going to want to shade in the 2010 series. Now, you can go in here and say, I don't want certain dates. I don't want, I only want, 2 million of the 2.5. You can deselect or unshade if you don't want it to be included. That you have that option when you open it up, to pick specific maturities. If you see the zero and you click on it, you can partially import information or amounts in. In this case, I'm just going to fully shade it in. To me, I don't care that it's going to pull in maturities that fall prior to the dated delivery date of our series. That's fine. By default, it won't show, but click on export and their debt service. Let's say it's 2010. Now you see it as the icon, right? When I double click, see, automatically calculates the interest and everything. Now, you may just have that information and you don't have the OS, you don't have the coupons, you just have the amounts, date and amounts. Well, let's say it's again, it's in this section already, we can see. So again, click on debt service calculator, shade in, click export, give it a name, and then it will appear. It'll export into the series. If you want to just hard code the amounts in, you know what the amounts are. You can go to additional info menu, other debt service. Give it whatever. The long name will appear in the aggregate debt service report in some separate column. That's another thing. If you um, if we had a 2010 and a 2015, you created a separate series. Don't select them both at one time because it will combine. Most of the times you're going to want to see the 2010 separated from the 2015. Let's just say 12 1 2016, right? I don't know. Let's see, was it 40 55 maybe? Now you may have semi-annual, whatnot. You may just have the debt service amount, right? So how, it depends on the information you have. Principal, interest, debt service. That's, you just hard code that in. If I said it was, let's say it's just 5 million a year. The point is, this is all, information that you're going to have, and you're just going to have to, you can copy and paste from Excel. We can also link it from Excel to other formulas. But the main thing is, if you know, if this was 2010 and this was a 2015, and you shade them both in and click export and pull it in, it will combine into one. So just know that you need to kind of, export the 2010, then export the other, then export the other, and so forth. So two different ways. One is you have the coupons, you have the par amount. The other is just you have some kind of cash flow. Those are the two different ways. If you just calculate, actually, I'm going to make, let's see, I'm going to just to pinpoint. Okay, good. So I'm going to, pinpoint a couple of reports here because this is right now just straight up, you know, you're saying, I want a level aggregate debt service. It's not even level aggregate net debt service. Um, this is what will happen. Pull up your aggregate debt service report, annual, and you'll go, great, this should be level. And then you go, wait a minute, that's not level, right? So we see the wraparound series, other debt service. Okay. Why is it not kind of like same thing I talked about before? View the net debt service. It's not level. It's not going to tell you why. What's the report? It's you can even see here. That's fine, but that's not going to show. It's a different report. Um, Bond solution. You'll go, oh, wait a minute. What's missing? The existing debt that we created. It's not showing up. So that's why this report, in most cases, will answer your, why am I not getting, in this case, level aggregate debt service? You got to go in here, select additional debt service for wrapping, click OK. Bond solution does not meet all requirements. Okay, let's see why. Get rid of that. And this is even if you do the right things. You'll see, oh, wow, that's not level. Again, view an aggregate, it's not going to tell you why. Bond solution. It's saying if you have existing, say it's 235 million, 236 million, we're only trying to bond for 60 million, right? Well, it's aggregate starting in 2051, right? Interest alone interest only, proposed debt, this is interest only, plus existing is greater than. So that shows you a lot of times, you know, you can't you can't wrap. Now, if these were maybe cabs, sure, but you just can't wrap 60 million going out to 65 around 236 million and get level aggregate from the beginning. Now, if you go, oh, that was a wrong project fund, what is that, 55? Here, I'm just going to make it 150, let's say. And it may not. No, it did. See, that message did not come up. Now, when we view it, you go, oh, so again, if everything mathematically, you do all the right steps and mathematically it's possible, you're not going to have to view the bond solution report. But I'm telling you, most likely that's going to be almost impossible. I mean, just going by experience. And so if you view it and you go, oh, it's all great, don't even have to look. I would still, and it shows you, yep, now we're issuing 163 million and change, around 235 million in existing. Yeah, you can produce a level aggregate wrap debt service solution. Everybody good so far? Why don't we, if so, why don't we take a 10-minute coffee break, bathroom coffee break, start back up in, what is it, 12:21, so 12:30, 10 minutes, 9 minutes. And we can then get the last hour of the refund, which may seem a little more intimidating. It's just because you have a little bit more parts to do. But yeah, why don't we do that? Coffee break, bathroom, answer calls, answer emails, and maybe a few minutes after half that, 8 minutes. That's probably not enough time. So how about like 35? Sound good? All right. Yeah, I'll be back in like 10 minutes. All right. Hopefully everyone can hear me. Let me go back to. All right. Give it another few seconds here. I said a few minutes after. I said around 12:32 or so. Um, but yeah, we can just make sure I'm still recording. I think I am. Yep. Okay. Still recording. Good. All right. So we kind of went through a wrap, a fill scenario, setting up level debt service. Um, the refunding is, especially if you haven't created one or you're starting to create one, can seem a little more intimidating, but it really isn't. You just Everything has to be calculated in the refund case. And in the refund case is it's kind of the middleman, or it's a way to link the refunded debt and link the refunding, proposed refunding debt. So everything is connected, the old and the new, um, it, the existing and the proposed refunding series is connected to the refund case. The refund case is the only way you can calculate an escrow, purchase slugs, open markets. That can't be done in a debt size that we were doing and whatnot. So if you can imagine, it just creates a little bit more work, right? So you're going to have to create the actual series. Now, there's ways to, as a cash flow, pull in existing debt. But again, you're not going to get the refunded stats off of that as you would, um, you know, either yourself or someone, colleague that's gone to emma.org or have the OS and input all that information. Um, so it's really not intimidating. It's just a little bit more work. So going back, remember we created this 2010, but let's kind of create some. Instead of just doing the 2010, I'm going to create a couple of refunded series. Um, and that way, um, just kind of shows you, when you create the refunded, the existing debt, like the 2010, um, you know, obviously that was incorrect. It's not proposed, and that's fine. It's not going to calculate it any differently. Um, but actually, I'm going to put that back just to kind of show you a little bit later if you accidentally not have the correct status for it. So I would recommend, for a refunding is, let's first create the refunded, the bonds we wanted to fees. Let's create that. So I could say 20. Okay, let's say it's um, oh, series. Don't want to do that. 2000. Let's say it's 2000 and I don't know, 18 existing series, right? Actual. And again, if you incorrectly put status, that's fine. It's going to calculate the same. It's just when we create the refund case and we want to select these series, it's not going to show up if it's proposed, but it's easy. You can edit it. Right. So let's say this is 2018, kind of stick with whatever the original, you know, uh, dated delivery, first interest, I'm just kind of keeping with the theme here. 2019. Say it's 48. Serial 48. I would always put in, even if these bonds, some of them have already retired, I would, especially if they're cabs, stuff like that, because they accrete from the original dated or delivery date. I'd just put that, even if it creates a little bit more work. Um, let's see, it was 18, so let's see, 19 through 12/1, 48. Just in case, just so you know, no corners were cut. Let's just say it was like three. And again, this is kind of like before. Um, um, this is again kind of like that 2010. This is information um, that you're going to already have. This isn't program's not solving for it. It's probably not going to be 2.5 million each year to make 70. You would hard code that issuant amounts. You would hard code the rates. If the yields differ or the price, you'd hard code that. And I'm going to create another, let's say the term. Uh, let's say it's two. Let's just say it's 55. Pick a term. I want to make sure. Okay, 40. So 49, 1. Let's just say it's 4.25. And then let's say it's, again, I could make up numbers. I could hard code in different amounts, but you'll have all that you'll hard code in. Now the difference now is these are subject to be called, right? I'm going to credit, you can create as many call tables. You may have different call requirements from the serials in the term. But in this case, let's just say it's 12/1, 28 at par. Right? But you may have, they may be at a premium. So you would enter in all the call information in the call table. And then, so if you don't do anything else, these bonds are still not callable. You have to go into the call provision setup and select this, because you could create multiple call tables. Right? I will say a lot of times if the call date falls on or prior the delivery date of the refunding bonds, which in this case will stick with the same thing, 12/1/25, um, you'll probably have some kind of a number of days notice. If not, all the bonds basically get called on delivery, right? So let's say the call date we enter in was 12/1/2020, right? Well, the new debt's getting issued 12/1/25. Call date's gone. So then you'll try to calculate and you'll get all cash escrow, because slugs, if you purchase slugs, there has to be at least 30 days from purchase to when it matures, meaning the call date needs to mature at least 30 days. Now, that's that excludes if you try to purchase on a weekend or a holiday is in between, right? So obviously 12/1 to 1/1, well, that's New Year's, right? So it may be 31 days or 32. Depends on when it's purchased and when it needs to mature. But for a slug, when you purchase, it has to be purchased Monday through Friday on a non-holiday, and then mature at least 30 days out from delivery. So you'll see that on the OS. It'll say if there is a number. Now, in this case, it doesn't matter because, these bonds are going to be called on 12/1/28. That obviously is more than 30 days out, right? So, and again, we may have another one. We may have, um, a 2000 and the point of all this is that, you know, that's going to be probably the big, um, in terms of 20, the work that you'll need to do, is, if it hasn't been, is hard coding the information in. But as you get more and more used to the program, right? Not these are going to be just, let's just do serials. We don't need to, you understand the concept at this point. Um, let's just say it's to 50. Serial, no changes needed. And we'll go 12, 1, 20. Oops. There's different ways. You could do space. Oops, 12 space, 1 space, 2050. There's dashes, dots, slash. Um, and again, let's just say these are, I don't know. Again, this is all most likely not going to have some kind of pattern going all the way down. And, but depending on if you have to do it by hand or if it's already in Excel, you can copy and paste. This 155. And again, two-part process, call table, right? You enter in the call information. 12/1 was 10 years out at par. Now we could do it just to show you. You could go 230 at par, or it could be, 102, whatever the call provisions are, you enter them in. And if these were delivered after 12/1/29, it would look at the first available call date and price them, or call them at that date. And again, call. But if you ever see, like, on the numbered days notice, if the call date you enter in falls on or prior or within 30 days, less than 30 days of the delivery date of the refunding, and you're trying to purchase, not a cash, it's just, you're trying to purchase slugs, then most likely you're going to put in some kind of number of days notice or make sure the call table is correct. So two-part process. You create it, then you link it. Mm-hmm. You'll notice if you try to get out and you haven't saved it, that gives you that opportunity. But again, I would get used to doing the Control S or hitting the save button. Now, if we go down, we've created a couple of refunded existing series, whatever you want to call it, whatever the original name is, you'd probably call it that. What do we do now? Let's create, now it's a refund case, right? So we can say 2025. Yeah, just do a refunding. Right? Click OK. Or refund case or whatever you want to call it. Click OK. Now we'll notice something a little different, right? It's not debt size assumptions. And we also see an icon here. When I click open, when we created the refund case, right? It also created, we could do sort by, it's the default. Short name. Interesting that created all the way over there. Let's see, long name, short name, A to Z. Interesting that it separates it out like that. But if you notice, I'm going to put it back on default. Whenever you create the refund case, it creates the same short name proposed refunding series automatically. It used to be you had to create it separately and then link it. All right. That's for when you go into the proposed refunding series. This is your refunding series information that you need to enter in, the new debt, right? So you may have, again, we're going to stick. So this is just like the debt size assumption setup, proposed refunding, actual series, 25, 6, 1, 26. Now I want to make sure that what's that going out to 50? Okay. Want to make sure that I have kind of everything. Okay, we got 55. Okay. So I'm going to create again, we can create all the bond. If we're going to do serial, I'm going to go out to 55. And our hopes in this is to produce some kind of savings, in this case, a level savings, right? So we'll go first is 26, right? 12, 1, 25. Yeah. And then 12, 1, 55. Right? Let's say it's real low. Oop. So, you'd put, if you have a cap I, if you have a reserve fund, a lot of times, here's where this comes in handy. Remember our issuance expense? Let's say it's not, it's 125,000. And let's say it's 4 per bond, 1 per bond, whatever it happens to be. And let's say you go, oh, I don't have any expenses, you know, or I don't have any underwriting fees, or it's 0.25 per bond, or it's an amount, or it's a percentage of par, right? You can 0.1% of par, whatever it happens to be. You would hard code that in. But at least this saved me, or it would save you, the description. And you could have a lot more than 4. You can always right mouse click or hit F5, append, if you needed to add more information. But the point is that you wouldn't have to start from scratch and type it all out and all that kind of stuff. So this is the proposed refunding series. So our hopes is when we refund these old refunded series that we're going to produce level savings, issue new debt, right? So I'm going to save, close. So we're back now, and I will make sure these are saved, and I'm going to just close these. You can keep them open. It's really your preference. It is easier to toggle back and forth, but I'm not needing to toggle there anymore. So back in the refund case, remember we went into the proposed refunding series. We set up all the, if you do have a new reserve fund, you put that in there. Here's the issuance expense, all the bonds, the new debt structure. Refund case. So that links it. How do we link the refunded debt? How do we refund these bonds? Click detail. I'm going to keep create. Now, how do we do this? We could go in here. So you remember when we created this? I wanted to show you. Remember the 2010 existing theory? Right? This is why you don't see it. Because It has to have status, actual refunding. So if I did put actual, which is the correct status, okay, let me get out of that. Now, when we go into the prior debt, we select the bonds, you'll see it. Now, these aren't callable, but that's fine. Now, a lot of times, again, remember like the debt service calculator? If you go, well, I only want to in 25, I only want to, refund half of it. There's an easier way, right? And I'll show you. So if you go, that's great, select the 2018, 2019, but let's say you go, I I only want a refund. Actually, we'll get to that in a moment. We'll get back to that. Funds on hand. If you, that's a big thing. If you have a reserve fund from one of these actual series that we're funding, there's no point of putting or creating that reserve fund in the actual series. The only thing that can really transfer, we see it a lot with subsidies, is some kind of a prior ongoing expense, which you can create in the actual series. That's kind of done more in the advanced class, just to show you. But if you do, or you're not going to show up for the advanced class, I think most of you are. If you do have like an ongoing prior expense in one of the actual refunded series, existing series that we created, and that's created, how do you incorporate that? You would click on the advanced and you would select prior ongoing expenses to be applied to savings and bond solution. But if it's a prior reserve, right, then you would actually have to give it a fund. You would have to know the name, or you could, if it's based off a formula, link it to a formula. And we'll get to that in a moment. But this is where it also set asides, any kind of transfer funds, you would hard code that in for issuer contribution or whatever. We do it here, but we'll get to that in a second. But back to this. If you ever need a percentage or some kind of an amount, the easiest way is first select the series, then go into input bonds, click the dot, 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 click import. And now this is where you can see all of it. If it's only certain amounts, you can go in here and hard code, or, if it's, I want to modify, I want to, let's say 85% times 0.85, right? Many different things you can do when it's imported. But if I want to, let me just cancel. That just goes if you need to do it as a percentage. And again, I showed that in the advanced class a little bit more. But all you really need to do in this section, at least right now, is just select the bonds to be refunded. At the top, by default, slugs. Now, when I click on the down, notice how it says current. So you might think, oh, that must be today, right? Well, click on the down arrow. So every time you download or someone downloads, it will download a current.slg file, and it will also download that particular date, in this case, 14 November 25th.slug. So current doesn't mean today's. It means the last, most current downloaded slug. How do you do that? So this is where it can get you a little bit of trouble if you just keep it on current and you don't click on that down arrow. You'll just sometimes assume that's the rate. How do you download? All of you can do this. You go to the SECS button, and you'll see down here, if you have an open market, tools, preferences, internet settings, at the very beginning where I said put in your company information, you do that. There's also an OMS, typically someone at your firm has access. If you do, you just help email data to DBC, and we will send it to you. You get a certain amount of downloads. But slugs are, you can download it, they're free. You click on the slugs. You can either do current, you can do historic, you can type that in, the historic if it's an older one. I'm going to do current and click on OK. Now it's going to tell you it's been installed. Okay. Now you can dictate that in tools preferences where you want. I would say that as well. I don't know, depending on your firm. Again, if it's a shared, then someone can accidentally delete it. And this is where you can set up your own directory. You could go in here and you could select wherever, and then create a slug folder. That way, whenever you download, it'll download it to it. So now going back, current, see, solved. Now the current .slug file is the 03 December 25th .slug file. So I would say we'll get this sometimes. A client will send us the refund and go, here's the deal. And I needed to reprint a bunch of reports, and now they're completely different than the original. What's going on? My number one thing is I go here. And if it's on current, that means, okay, 6 months ago, you were using a slug file, completely different rates, right, to generate basically your escrow cost. So of course you're not going to get the same escrow cost. So you're not going to get the same par. You're not going to get, so what I tell them is, okay, you got to go and find, you need to select, maybe it was a couple of years ago and it was December 20th, and they go, oh, and then they select. So there's kind of a double-edged sword here. If you're kind of early on and you do hard code that, select it, well, you just have to remember, if you're running the numbers and it's 2 weeks from now and you want updated numbers, well, you probably need to download the slug, or someone does, and it's linked. Then you need to then select the most current downloaded slug. If not, then, so I would just say that just remember, if you keep it on current, that's fine. But that doesn't automatically mean. So for example, if you're in charge of downloading on your own these slug files and not someone else, even if it's someone else, don't assume that they're doing it every day, right? Because if you keep it on, now the reports will tell you, escrow reports will tell you the slug file you're using. So that's a big alarm if you go, wait, why are the numbers all weird, or they haven't changed? You may go, I don't understand. For the last couple of weeks, the numbers haven't changed. Well, if you keep it on current and nobody downloads, or you're not linked to where it's being downloaded, then it's the same slug file. So just know that current doesn't necessarily mean the most recent slug file available. It has to be downloaded and you have to link it to it. So global proceeds escrow, if it's not restricted, you put NA, and so forth. So general bond, refund by default slugs. If it's a PV, you can do PV. If it's all cash, you can select cash. Generally, I see it slugs only or open markets. The new proposed refunding is linked. We link the old savings assumption setup. If you ever look at your savings report and you go, I have a new reserve fund. How come I don't see the cash flow of my, we didn't create a new reserve fund for the proposed refunding series. But the point is, if you create something and you go, why am I seeing at the bottom in the savings summary, I'm seeing the reserve fund, but I don't see it instead in the cash flow section of the savings report? Well, it's because you need to make that change there. Same thing, you have accrued, other sources, other uses. I don't want to show my I have another source, or I have a rounding I don't want to show in the savings summary. How do I do that? You'd select NA. You do have new ongoing expense. You don't want to show it in the savings. You do that. So savings, that's not the same necessarily as how it's being solved. Um, there's an FAQ on that as well, but it really, for example, you may have, um, a transfer of an old reserve fund, and you don't account for it in the solution, but you account for it in the savings. So you'll get different results. That's why I do stress, kind of like before, view the bond solution report, even if the savings report looks correct, just to make sure everything, and I'll show you here in a second. Solution assumption setup. About the only time I'd say you're going to have to make a change is in this. It's not automatic. I always kind of argued it probably should be set default to uniform, but I think it's a programming thing. Everything is set to level. So you would make that change. What is that level? It's uniform level savings. And something that's a little different, you'll see transfer proceeds. That's fine. Solution, that was the same. That's the same. You'll see now this include prior debt service. That wasn't shown before, right? In the, let me just close this out. Okay. Um, when we created a new money, we didn't see that, right? So by default, you're going to base your new structuring off the refunded debt service, right? If you want to add to that, if you go, I don't want it to be off of that, I want to create my own, then the biggest thing is sometimes clients will go, oh, I know what the structure needs to be. It's not prior debt service, it's whatever. And they hard code it, but they leave the yes on. That will add to it. And they go, I don't understand why, one, they're not viewing the bond solution report. And they go, I don't understand the output of this new debt. I hard coded these amount. Why is it much larger than that? Well, I immediately will go in here and I'll say, oh, that's selected. Yeah, that's kept as yes. And probably it throws them off because it's in black font. So they just, I don't know. I never asked, but that happens more times than not. So if you add screen entry, that adds to it unless you select no. Right. So refund case, it's really not. I can see before, even when I started at DBC, I thought, oh my gosh, the refund is so intimidating. Even the tutorials, the debt size and refund, there was 200 or 300 pages. Well, that's because every example is we show every available report. So it really, actually, what you have to hard code in is not a lot. So don't be intimidated. The project finance tutorial is it's a lot fewer pages because the assumption is you already know how to set up a refund. You already know how to set up a new money. So let's get to, setting up the project finance module. But anyways, I've had through the years a number of clients, more than one, say, I finally, after X amount of time, it could be years, I finally, whatever, it was a holiday. I went through the tutorial and I'm kicking myself because this would have saved me so much more time. And I'm like, well, I know. But the problem is there's so many pages or too many for a lot of people. And they just assume, oh my gosh, this is like probably so much information. I got a hard, no, it's not. It's bigger font. Again, every example we show, we have advanced analysis in it. Conley went over the fill, the even target amount, everything, all the reports are shown. So that adds a lot. But anyway, back to the refund. Again, this shows the bonds that we are refunding that we selected, right? So we've created and selected the refunded. We've already set up our refunding. Let's calculate and see how this goes. Now, one or more refunded bonds mature on or before delivery date. I, I've always argued that I don't know why we had that warning message. I mean, I knew, or that we hard coded in the existing series bonds that matured prior, to 12/1/25. We know, but I don't know. I guess maybe someone complained and wanted that in there. I don't know. But so, like anything, you get a snapshot. Anything's way out of the ordinary, let's say expenses. If you go, 1.5, oh my God, it was supposed to be, 150,000 or something like that. Well, you probably hard coded in the expense incorrectly, or it's supposed to be 1.5, but it's 100 or it's 15,003. Well, you probably did an itemized expense and you thought I need to enter it in thousands, and you can immediately go to the expense section, the proposed refunding, and make that change. But it's just a snapshot. Some new reports we're going to see. Saving. And again, the savings report. Actually, I'm going to do it twice just to show you. Trying to show some new reports that that are obviously not in, bond pricing, bond statistics that we just saw. Bond debt service, we've seen those. These are more kind of, I wanted to focus on the refund side. So if I say save as, see how we don't see that report packet we created, because now we're in a different module. Now, I think in the project finance module, you will see them maybe, but as you can imagine, different modules have different reports. So, you create a debt size like we just did, it's not going to show. I think because of the unique reports that are module specific, that's why. So in this case, I could just say refund, I don't know. Okay. Now we'll see it. And again, if you guys do share any of this stuff, is whether it's in tools preferences, whether it's you guys all share slug file, it's on some kind of shared drive, you click and you can go search for it and link it, create your own. Same thing with like report packets. But again, if you all share some kind of a shared drive and someone deletes accidentally report packets, depending on your backup system and how it works, it may be gone. But if you have it already in your selected, I think you can then resave it. But the point is, it's like anything, right? You share something, someone deletes or overrides it. Component gallery. And again, you can set up multiple component galleries. You can have your own, right? You save it, you link to an existing one, but then you can delete this. If you delete the link after you've, let's say that someone set up already component gallery and said, hey, I want everybody, say your bosses, everybody shares this, here it is. But then you want to do your own, you don't have to link it to it. You go to tools, component gallery, you can create a different component gallery file and have that. So then you can flip back and forth, link it to, other colleagues have created. And again, you forget how to do that, just let me know, or send us their file and say, hey, I just need to know how to create a component gallery. It's not really related to this file. And then we can help you on that. Okay, so going back here, print. review. Just wanted to kind of focus on a little bit the different, again, table of contents. So now we see refunded cash deposit, cash, slugs escrow, cost of issuance, underwriter's discount, right? A little bit different because obviously we have an escrow summary of refunding results. So not only do we get the par amount, the new, but we see the par amount of the refunded, average coupon of the refund. So we get basically the refunded average coupon, average life, and the new proposed refunding average coupon, average life. And it tells you savings percentage doing this. That's a huge savings. That'd be nice if we can all have deals like this. 58 million and change of net PV savings. That's nice. So, summary bonds refunded. Remember, we set up 10-year call at par for the 2018. And then we had a premium, 101 at 12,129 for the 2019. And that's the end of it. Again, I tried to save, I tried to create a bigger, so it's easier for you guys to view it. A little difficult. So this is a fairly small monitor size. The reason I didn't modify at all because we get this a lot. We'll get the PV. Why is PV savings? Well, PV savings is based off of each cash flow. It's not annualized and then PV back, right? So if someone sent us their file and says, I'm trying to PV back at 12/1/26. How come I'm not met? Well, no, you got to PV back at 6/1/26, then PV back at 12/1/26, then add those together. So present values each cash flow. And sometimes there's, you may have multiple refunded series that have different maturity dates. So that's why I just wanted to show, it's always good if you're trying to verify, at least view it in the most of the default, which is continuous. It's not even set to semi-annual because semi-annual can be a little confusing because what if it's not what if the refunded and refunding aren't on 6/1/12/1? Well, it can semi-annual it to the refunding 12/1 and 6/1. And so that can skew it as well. Just keep it default continuous, at least to verify. But what if that's not what you have to do, or that's fine, then you can see savings. But again, you're going to get this. How come I don't have level savings? As you can see here, just like before, net debt service, if you're trying to solve, or, level debt or level aggregate wrap debt service, viewing those debt service or savings reports, it doesn't match or it doesn't give you the information you want. It's not going to tell you, right? Savings is just going to show you what the output of the prior, what's the output of the refunding, and here's the savings. There's the difference. It's not going to tell you. So in this case, it's fine. You're like, good to go. That's it. Don't need to be. Well, a lot of times that's not the case. And maybe I can show you an example real quick. And at the bottom, so you remember savings assumptions, apply other sources, other uses. If I selected NA, then that would go away. And again, help tutorials refund, when it prints out this report, there's a part of it and there's more info and it will have an arrow to it. This includes project, reserve fund, blah, 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 So a lot more detail that, you may have a reserve fund and so forth. So there's a number of things that can be included as a funds on hand. And I'll show you in a minute a prior funds on hand. But here it is. So if it's fine, again, you're good to go. But the bond solution, This is, again, going to show you, revenue constraints, 347 million, 228, 750. That is 347, 228, 750. That's the prior debt service. So as you can imagine, if you did some kind of, you added some kind of a cash flow, um, that's what we get a lot. Like I showed you before, they didn't select no, they put in their own cash flow. Well, by default, the savings is going to compare the refunded debt, the solutions comparing this cash flow, right? So you have to make changes to make them match in most cases. So new debt, right? Total adjusted debt service given the refunded debt. The difference is savings, unused revenues, 2.391, 71,780,000, in savings per year, or per year, 2.39. So that shows you unused revenues is a savings. Difference between revenue constraints, which is prior, refunded debt, structuring of the new debt. So you can see kind of a common, you see really a high amount of debt early. Obviously, we need to produce a lot of principal in the early years, right? To produce overall level savings. And now these are the requirements, the bonds that obviously mature prior to call date and their interest. And when they're called, 12/128, 12/129, premium. Remember, it was at 101 for the 19s. It shows you that. Now, this happens a lot. You'll go, wait a minute, I don't want these rollovers. In this case, we are this is producing rollovers in order to get from the default to get escrow yield under the ARB yield. But if you want to change that, how slugs are allocated. If you do it proportionally, typically that will no longer do it, I believe, at the earlier requirements. And let me just see. There we go. Much different looking now. Now they're just certificates and notes. So it's going to show you when these are purchased to meet the requirements that we just showed you. So here are the requirements and their dates, right? Whether it's interest only or principal and interest, obviously the large one at 29 and 28 is the slugs, and it tells you 03 December. So the escrow descriptions report will tell you, if you forget, which slug file you're using. So if you select the actual 03 December 25, and then a week from now, you go right back in and you run your refund, you're going to get different results because most likely the rates on these slugs that you're purchasing are different, which differs the escrow cost, which differs the amount of par needed, and so forth. Well, you will go to the escrow descriptions, you'll see 03 December 25th, and you'll go, wait, why is it using, this is 2 weeks from now. And you go, oh, I got to go back and, select the right slug file or download and then select it or keep it on current. From descriptions, and again, a lot of these reports, this is fine. You can modify them real detailed oriented, but the cost, and I'll show you in a second, that's fine. The escrow cost, cash flow, sufficiency. Sometimes in refund assumption setup, you can add $1 if you want to keep that balance at least $1, but this is very efficient. Sometimes that's not the case in open markets that have specific maturity dates, which may not align with the escrow requirement date. And then very little cost of dead time. So this is a very efficient escrow. Now, you may have something like some kind of a transfer. Let's say a 2010. It's going to, let's say it's 100,000, and you go, I want to apply that. I want to apply that towards the escrow, right? And I want it to, I want to fund it a certain way. So what you do is, obviously, if you just do this, that's fine. It's not going to be spent a certain way in the escrow. But this goes for anything, where it's a set aside, if it's an issuer contribution. And again, you can either hard code the amount. If it's based on a formula, you can create a formula in proposed refunding, and we'll do that in the advanced class. This is more advanced, but I just kind of wanted to, since we have a few minutes left, let's just say I called it, I don't know, doesn't really matter. I mean, it can matter like on the reports when you break it out. So it should be somewhat descriptive. Let's just say this. So I want to spend it in the escrow. How do I want to spend it? Again, F1 key will tell you exactly how it's going to be spent, allocated, and so forth. I'm going to do select first. If it's not yield, you can do NA. But I kind of wanted to show you a couple of things. Okay. Now this is good. The global proceeds escrow is not used in all the settings. So that's if you enter in anything in this escrows tab, even if it's just an escrow name, right? What that does is it basically is not looking. So if you add additional cash, if you set the yield limit different, it ignores because it's no longer a global proceeds, 100% filled with bond proceeds, right? We're saying now we want 100,000 be applied from this old reserve to be spent first, and then the remaining is bond proceeds, and that's fine. Just to kind of show you a few. Let's see that. Okay, get rid of some of these. Bond solution doesn't matter. Let's see the requirement. Yeah, escrow cost. I'm going to modify that to break it out. A lot of times you'll want to see it. I'm going to just, so we're going to see a few changes here. One is we'll have less amount of bond, par amount needed, right? Because it's going to reduce it by 100,000. You'll see the transfer there. Savings, that's fine, 2.3. Escrow cost, now we see it. See how we see the spent first, select first, the 100,000. The slug is purchased, and it breaks it out. This is to be modified any escrow or the escrow cost from aggregate, the standard default, to detail or alt detail. Summary will just, I think, break it out in two different reports, which you don't want to do. And then escrow stats will even break it out per the BP, fill, and the reserve fund. So that's a little bit, we'll go a little bit more in detail with funds on hand. But if you ever have, I would say sometimes clients will go in here and they'll go other sources and they'll go, you know, and they'll add, I think that's 150. I think that's, you have to actually do the actual amount, I think. They'll do something like that. Oh no. That is that. Yeah, that is. You can see I hardly ever use this because let's say it's 150,000. Well, I get this. We get this a lot. They'll say, "Oh, well, how do I spend the 150,000? How do I spend that in the escrow? How do I apply it um, in the savings and the solution?" Well, you're going to have to go in here to, and basically do it like that. That way you can adjust by default no, and it's upfront. Um, any of these, if it's not upfront, it's a cash flow, prior reserve. Then you have to, what's the maturity date? What's the rate if there's interest on it? And again, that's more the advance, but I just wanted to kind of quickly show that just because I know it's 3 hours it's up. So, um, does anybody have any questions? No? Okay. Um, well, I'm more than happy to answer any questions. If not, I know this is a lot of information and want to say thanks. Hopefully, if you get enough use out of debt size and refund, obviously in 2 weeks from today will be our project finance training. So that's a little more straightforward and the understanding of, you can pretty much create debt size, any kind of, which we've done today. Um, but yeah, I just want to thank everybody for showing up. I hope you got some use out of it, and there's enough time for you guys to go get lunch and all that good stuff. So, um, yeah, I guess that's it. I will stop the recording. Oop, oop. Yep. Okay.